We're going to kick it off. It's 10:04. We have a lot of fun things to talk about. We'll start off with some introductions, and then I'll kind of maybe go over a little bit more. So for starters, let's pass it to Nick Gearhart here, my good friend, longtime mentor, and he's famous in the insurtech online world. So sure. Nick, over to you. For those of you that don't know you, I think giving a little more background is
sure.
Great.
Sure, yeah. So Nick Gearhart, I've been in the industry for a number of years. Worked as insurance commissioner, as most people kind of remember me for. So I'm a has-been, so I can speak a little bit more freely about what regulators should and shouldn't do. But just happy to be here. Currently a chief innovation officer for Homestars Life Company, so very involved in a number of startups, both as a board member, advisor, investor, and all that. And I've known Dustin, I don't know, 6-7 years now. Dustin, I don't know. So
yeah, I just go back to the amount of times you told me I was crazy.
Well, I think I might have said stupid the first time, but yeah, crazy. Right,
but that
we landed on crazy. Yeah.
About 7 times, over 7 years. So I think that's about it. But
no, but in all seriousness, Dustin and I met when he had his first version of a company, and I think I did say it was stupid. Actually, I'm sorry for that. I shouldn't have said that.
You didn't say it to my face, which was nice.
No, yeah, that's all right. But anyway, so it's good to be with you all, and I've been watching Dustin and been along for the ride for a long time on Surify.
Nick, thanks for being here. I'm Dustin Yoder. As Nick said, I guess I started Surify actually coming on, now it's actually coming on 10 years ago from company formation. So been through a lot of ups and downs. I'm the CEO here at Surify, which practically speaking today, which is coming on about 200 people here by either end of month or in next month, means that I get the privilege of working with a bunch of really smart people that have chosen to join us to reinvent or help life insurers to reinvent the space and kind of meet the demand. Nick and I, this is the first webinar I think we've done with 2. So the hope is that this will be more of I like to think of like a podcast style in a way. So look over to your right side. There is a chat menu that some of you are figuring out. But I think it is fun. I think it's more fun, actually, if we're kind of getting live stream comments and or questions that Nick and I can address. We obviously can't address everybody, but some of you have already figured that out. And it looks like you're typing. So please keep that going. This is not a stuffy environment when Nick and I are around. And so you can ask anything you want, and would love to make sure that's front and center. So, but today is about the Amazonification of life insurance. Truth be told, let's all be frank. That's a very provocative statement. That's why we did it. We're not going to lie. The question is, the state, for starters, is like, no, Amazon has not entered life insurance, just so we're clear. However, I think as we look at what the word Amazonification means in the Urban Dictionary, if you look at it, it's really about my little green underline thing here, which is, a company changing the business dynamics, such as 2-day shipping, et cetera, or whatever it may be, is causing customer expectations to change for all other businesses. That's why we're here today. That's what we're talking about. That's why we think we've had, more registrants for this than any other. It's because we all know that is happening. We're all feeling that, and we all want to make sure we're not a victim to it, but rather part of that. You also note that, I think when we talk about Amazon, we think, it's buzzy, it's provocative. And that's because if you look here, this is actually Amazon's breadth and depth of where they're expanding out into businesses, whether that's fashion or Amazon Fresh or all I was definitely doing some research here on their distribution of financials. What you see surrounding them is actually all their competitors and or possibly the incumbents prior. So it's really interesting to see, there's definitely no limits in a sense to what Amazon would, should do. And I think it's just representative going back to them selling books, however many years ago now. So I think more closer to home for many of us is kind of their step into fintech, right? And so, CV Insights does great work here, and I've always been watching them, whether it's their insurance or across the line. But when you look at, this is about the unbundling in the bank. Maybe some of you have seen it, but it's amazing to see, for example, what Amazon has done across fintech here. Just going across the Chase Bank, app, and then saying Amazon's doing this, this, this. I mean, it's self-explanatory, and I think quite revolutionary. They're really giving them a run for their money, and a lot of people are betting on them, right? So big opportunity there. I mean, Amazon has not neglected even the grocery store, right, with the Whole Foods acquisition, and now what they're bringing to that, Amazonification process, which many of you are probably experiencing. Across the street from my house, there is a Whole Foods delivered on every 2 days, and then the buying behaviors there in the new stores that you can partake in. As Nick and I really talked about this and met, I think Amazonification, which, giving credit to Nick, was, we just said, let's talk about this because we think this is really flashy. It is about the FANGs in a way where you have all these big companies that have lots of eyeballs, distribution, etc. And, in many ways, I think Amazonification is about representative of big tech and all them, having their hands in what is a legacy and traditional businesses, or targeting them for massive overhaul. No greater, this is happening, like Tesla, for example, as with insurance, and I'm not telling anyone that's on this call anything new, but then you even have Apple Life. No, I'm just kidding. By the way, this is I made this slide. I made this a while ago, back in 2017. But for example, as Apple was coming out with all their different back-end integrations with EHRs and health tracking, I kind of envisioned a world where how easily someone like Apple could enter and really have access to everything. And I currently feed Apple all my information because I want to see what they're coming up with. But just this is all staring at us. If you look at Keith Moore, which some of CoverRound CEO, cyber policy founder, I saw him post this the other day, and I thought this is as I was building some content here, is just commenting on Amazon's note to shareholders, and I think this is, once again, this is us as consumers, but also us as managers and innovators in the life insurance space, paying attention to what Amazon is telling their shareholders, and or the way they're pushing the world. To think that 28% of purchases are 3 minutes or less on Amazon, 50% are 15 minutes. It's just wild. And this is, there's a lot, to think we're ordering our groceries and doing all this so quickly. It just has so much relevance, and critical thinking needs to be done around what we're doing in the space, and how we're thinking about the businesses we're changing. Maybe more importantly, and there's a level of fear here, but also just showing a level of opportunity. This is you look at NPS when Amazon's achieving 69, at least that's what I was pulling off, borderline being world class, and to think I continually say, as we work with life insurers here at Surify, I mean, what would the consumer say tomorrow if Amazon offered them life insurance? Have they earned that right? Are they delivering everything that a customer is expecting? And in many cases, I go to say they're changing the game on what people expect, which is putting more pressure on us. And I just think whether it's the FANGs or others, they really have that voice that really could offer things that we say no, they won't today. Because if you earn the spot in a customer's life, you really you're that much more opportunistic. I even see Lemonade, right, which started right now in renters, and we can talk all day about that kind of stuff. But actually, just they're moving over. If you look at just practically speaking, their move, for example, to their announcement to move to auto, I think you reflect on that, forget their financials, their valuation, etc. It's just, oh, they have the right now. They apparently have a lot of happy or interested buyers, and now they can expand. And I think there's something to be said here. do these parties have any business there? That's for all you professionals to decide. I'm just watching it, reflecting on why is it that they could go from renters to home to now auto. It's because they earned that spot. If you, one of the catalysts for Nick and I's conversation here that we're going to have today is also about Next Insurance, right? Getting on, being part of the kind of checkout or point of sale with on AWS or Amazon in general. And, I thought, obviously it's always an interesting, PR campaign when, InsurTech partners with Amazon. We all know that. But I thought, guys, comment about, why they're doing it. It really comes down to, you see at the bottom here, like we believe in the future of insurance is buying experience involved meeting the customer where they already are and making it easy to purchase. I think, it goes back to, does Amazon have us? Does Amazon have our eyes? Are we where they are? And you see Next, which is, I don't know much about them in the grand spectrum. I know they're doing well, at least raising money and doing what they're doing there. But their ability to just see that opportunity to go for a spot on where millions of eyes are is pretty practical and in some ways not revolutionary, but then also hard to get that spot. As I worked and we thought about this, I thought this was a cool, breakdown or way of thinking about, also, how Amazon's taking what we're consuming for starting off as a brand, whether it's video, fresh, games, music, they're watching us there and we're consuming something on a I'll call it like a value added level, right? We're getting what we want, but out of that behavior and as they watch that, the data we're streaming to them is quite endless, and possibly more than we know. And you start to think of like what each one of these brands are representing, right? They're representing parts of our life and what we're doing and what we're going through, et cetera. And so then you have the subsequent data that feeds off of all this. I think, where I'm going here and where I'm leading us to think about, hopefully, is that like, well, what's that next step, right? Like, do we have, I'd go as far to say the logic is there that we quickly can enter, Amazon Protect / like, I'll go as far to say life insurance and anything else, because so much of that information is actually sitting under our customer account there already. And, working with life insurers, for example, as we try to shorten applications and all that kind of stuff, as well as make sure we get all the underwriting information, you start to see, if you start to fill it out, the life insurer, we're looking to maybe aggregate or bring in that data from an existing account or a third party that can feed it. You look at someone like Amazon, they may be able to fill that thing out on their own, prior, and that's power. And I can't tell you I have an answer for that today, but very interesting to think about. I think it's always fun to say, okay, what would this practically look like? Like, think about it. It's not hard to imagine how, I'll call it Amazon brings it to you, whether it's life insurance, right? Like in the most basic of fashion of like a checkout, right? All the way to, okay, well, now we know life events. I was experiencing this as I had, my first child, right? Amazon didn't know me as someone with a child. And all of a sudden I started doing things on behalf of my wife and what they said. But also I started buying things that were about the child I was having. And so their ability to bring those things in, whether it's like, the home buying process, right? Like, will they have that opportunity here? You start to really look at all the things we're buying and what they tell us, what it tells Amazon about our life events, our journey. It's just a huge opportunity. That's how I'm seeing it. It's not hard to imagine how they expand, right? Whether it's Halo and, tracking, and then what they know about our fitness. Even now to obviously like Amazon pharmacies and whatnot. Like, you look at between MIB, RX, the health information we collect. We just have a massive, we're feeding the world to them. I would say I'm not against it, but I would just say that the information is there for them to really enter our space if they so choose. So I'm going to be quiet. That was really intended to get our brains all cooking this morning. But Nick, hey, as we talk about the FANGs, a good old story would be good to talk about, even when Google, had you come out as a commissioner.
Yeah. No, thanks, Dustin. That was a good level set for everybody, and got a lot of questions in the chat areas too. So we hopefully get to some of those. But I joke a lot. When I was commissioner, I got invited with a couple other commissioners and some industry leaders to visit Google's campus, and it was actually quite an experience. We got to look at their driverless cars, which was fascinating, and how they built that. And we also heard from some of their business leader units, the person that started Waze, and then the person who was in charge of Google Compare. And I joke, a week later, they announced that we're shutting down Google Compare. So I'm not sure if it was because the commissioner scared them off or not. I actually think it was more just they figured out that, hey, the business model wasn't really right for them. But, we've seen, these big tech companies dabble in these areas. Google did that, and they're, doing it overseas. Amazon's kind of looking at this overseas. And, one of the questions I think out there is, do we think these big tech carriers or, big tech companies would be carriers, Probably not. And we'll get to that later. But, they've sniffed around the business of insurance really for a decade, honestly. And if you think about Google, they've got some of the smartest people I know in risk management there. And they are an insurance company in many ways through their captive insurance program. So, it's not a leap for them to get into the industry in some form or fashion. But I always found it interesting when they looked at Google Compare and they figured out, selling auto coverage and being an aggregator even was a little bit harder than they even expected. And, they probably had other income streams they're trying to protect, et cetera. But, I don't discount their ability to come back in at any point. So.
Hey, Nick, we're gonna get to, I got a +1 here on Kevin's comment about, the regulation around this, et cetera, which I want to kick off in a second here. But I think before we do that, I wanted to stick to one of the questions I had here that I hope we could talk about, which to you, what is, I've given a lot of example, but what is the Amazonification, or what does Amazon have? What's their advantage when you really look at it, as we start to talk about life insurance and kind of the greater pillars of what we're hinting at?
I mean, to me, they have brand, they have scale, they have data. And when I say scale, I mean distribution, too. So scale, data, the ability to personalize, take down friction. I mean, to me, and that's why, Amazonification is much more than just Amazon. It's even some of the insurtechs out there that have really done a nice job of taking friction down around, buying insurance. My first life insurance policy I bought outside of work was when I had a child, many years ago now. But I bought it online direct, and did the pyramid at my house. And yeah, the process has gotten better. We've got accelerated underwriting now and better tools now. But some carriers, they didn't really modernize it quickly enough. If you think about doing pyramids and trying to execute in a pandemic where you don't want people in your house, even some of these carriers probably struggled quite a bit this last year. But to me, Amazonification is really just meeting customers where they're at, taking the friction down, and offering that better customer experience. And the industry is getting better at it, but still got a long ways to go.
Yeah, no, I got mine. I went into my FA's office, got life insurance that summer. I got married, coming up a couple months, and I remember the voided check I submitted, et cetera. That was a requirement for it. It was something I was paying $33 a month or something. It's still withdrawing though, so there was aspects of effectiveness. But hey, let's make sure. Like I said, I wanted to keep the questions rolling here too. So, question from Kevin that's got a little upvoted here. Do you think that Amazon has the appetite to directly enter such a regulated industry, or do you see them more as being the aggregator approach?
I mean, to me, it's not really the regulations are hurdles. Obviously, it's a highly regulated industry. To me, it's really much more of return on capital, return on investment move for them. I think, when you're in a business like Amazon, Google, Facebook, et cetera, they have margins that would just blow the doors off of anything we would do here in insurance. And so I think it's much more around, do they really understand the returns that well? I mean, they're probably much better off, in my mind, looking at, the distribution data plays, et cetera, possibly helping carriers modernize their stacks, even, in that kind of world. Do I see them becoming a direct carrier? They could. I would be surprised, and as a shareholder, wouldn't really like that use of shareholder value because I think they make more money doing other things. So I just see them as being able to really partner with companies. The next thing is really interesting to me. And I met Guy several years ago. We were on a panel together at the first ITC. And, I remember sitting right next to him, and he made the comment about, buying commercial insurance would be like buying his shoes on Zappos. And at the time, I thought that was kind of crazy. And I look at what he's built, and it's pretty darn impressive. And if you think about the data he's able to abstract and how he can go straight through, I don't discount the ability of a company like Next. I don't discount the ability of a company like Ladder Life and some of these companies that have emerged. Bestow was in the comments too. So, I don't think Amazon wants to be that carrier. I think they'd probably rather partner and figure out ways to monetize all of their data and customer experience.
Yeah, and I saw a comment by Michael Myers here about, and thanks for, reconfirming that Lemonade is offering term life. And what's interesting is Lemonade's offering term life through Bestow, which is almost in the same way that, Nick is, at least I'm deriving, like easily Amazon could, right? So this almost the same function, right? Like they don't carry the risk and, don't carry the big balance sheet, but rather like offer these these benefits, which Amazon is doing. Like it's more than just that whole Next thing, right? Like when I check out now, pretty much anything I buy that has, probably more than 10, 15, I don't know what the limit is, mixed with the fact that it can break, they're offering me insurance on that. If I'm not mistaken, it is third party there. But if you notice the themes at Amazon, I don't know if any of you know, Amazon's becoming one of the biggest retailers, not because of the selling they're doing for others, but actually they're collecting data. This is something, they're the strongest, I've got to say this correctly. They're growing their SKUs of OEM products faster than anybody else in the market. And practically what they're doing is they're just picking off. When you go, when you buy that HDMI cord and it's, you can look through the expensive one down to the cheap one. What they're doing now, which we all experience with Amazon Basics, right, is they're actually becoming the full stack supply chain holder across those, driving, looking at the items that they can make the biggest margin on and owning them. That's one of the hard parts, right? I think, when Amazon realizes you do something they can make a lot of money on, they're not shy. And you see that within all these ecosystems, right? Once the margin is clearly stated, they either buy that company or just go around the back and create it. Let's see. James here is asking you a question. Nick, could you comment as a former regulator about the use of data obtained from alternative sources for underwriting? Data for lead generation is different than used for underwriting.
Yeah, so obviously most people on this call are probably aware of a lot of the work happening at the NEAC currently as we speak around the Accelerated Underwriting Working Group and even the Artificial Intelligence Working Group, and how, in my mind, a lot of these things have started to really converge around some really big themes. And most of it really is around, the misuse of data. And there's a huge distinction between data used for attracting consumers, top of the funnel, versus underwriting, et cetera. And pretty big differences in my mind between different lines of insurance as well. So if you think about all the work in the commercial insurance space, I'm on the board of a company called Carpe Data, and they service the commercial world. And that's a lot different than the personal lines, which is different than life. And so as a life insurance, webinar here, I do think you have to be pretty careful about how you're using some of these data as sources. At the end of the day, the regulators will say you, the carrier, are liable for that, and you, the carrier, have to be able to prove out your accelerated underwriting workbench and how it works. And what I think is fascinating, though, if you think about accelerated underwriting as core, is really meant to kind of take the best of the best, if you will. Depending on which model you talk to and who you talk to, a lot of these are hoping to get 40, 50, 60% through a funnel quicker, et cetera. You still would have some component of traditional underwriting for certain individuals that go through that. Now, what we're starting to see, I believe, is that some of these insurtechs, that I've talked to a couple of them, are really focused on that data analytics side of it. And you really would want to dig into, kind of how they're using that data, their sources, et cetera, make sure it aligns with how you want to do business. Because at the end of the day, you do have some brand risk, I think, if you're doing some sort of proxy discrimination or something that's not above board. And I don't see that happening right now in the life insurance space. Maybe it is. When I was commissioner, I was also chair of the A committee, which is the life and annuity committee. And certainly back then those issues were raised from time to time, but it was really just starting. I think the debates are going on now, and I would highly encourage any of you to follow the work at those different work groups at the NAIC. And if you're a larger carrier, you probably have people that do that for you. So make sure you just plug into them, and your underwriting people, should be talking to the GR people, and should be talking to the legal compliance people for sure.
Nick, I feel, part of it is like, we're talking about all this. There's a level of, there's a level of fear, and I think there's excitement and fear when we talk about this subject. I think it'd be fun to take a turn, kind of like let's take a turn on like where the life insurance needs to go. And what I mean by that is, rather than sit here and talk about what we're not doing and kind of getting our food eaten, what do you think, like practically speaking, like where do these life insurers need to go?
Yeah, no,
that's kind of the question when we fear somebody, is right. Let's not get eaten up.
Well, yeah, exactly. Let's not get our lunch eaten, or have our cheese moved, right, from that book, Who Moved My Cheese. I think really the thing you have to think about is you'll never be Amazon. Amazon has things that no one will ever have, and I don't think we have to be. I think we just have to make sure that we offer good customer experiences, have good financial stability, have good products, and meet the customers where they're at. So in my mind, it's partnering with InsurTech tools that are out there. We're actually pretty fortunate as an industry right now, where through APIs and other integrations, you can partner with companies like Surify. I'm involved with a company called Benakiva as a customer. So on a claim side, so I don't have to build an instantaneous claim system. I can use Benakiva and pay out claims instantaneously. And guess what? In life insurance and annuities, customers love that. And some carriers don't want to pay out claims that fast all the time, obviously, but to me, if you've priced the product right, you're in the business to pay claims when they hit. And so we'd like to pay them as quickly as possible. So I think, from our perspective, you don't have to, build an Amazon. You shouldn't even probably touch these things in terms of building them internally. Looking at partners and solutions, having the right innovation funnel, so you figure out what makes sense, having an innovation strategy, knowing your customers and your agents. I'm bullish on brokers and agents. I don't think they're going away. I think that good ones will get more business. I think there'll be fewer of them over time, but I do feel like if you can scale up your agents with the right tools, those folks are going to really just smash it out of the park for you, because they're still going to be very value added. So I'm bullish on the incumbents. They should be able to win. Some won't, but I think a lot of the companies that, Dustin, certainly you talk to, you can speak that too, but you talk to, hundreds of companies a year. You go in and talk, I had you come speak to our board even at another company. So, it's just a culture and a mindset from my perspective in terms of the leadership of these companies, making sure that you're committed to these tools, understanding the tools that are out there, having a process that can validate, and then having a strategy that you can align it to a goal at the end of the day.
Well, I appreciate some of your plugs for us. No, as you said, this is close to home, and I think the reason why this stuff is always in my mind is like reflecting on what I'm experiencing as a consumer, and then looking at it, how we're going to make sure to take care of our industry. Justin here writes a comment, just streamed in. Sorry, I know people are writing some good comments I'll get to. It says, where do you rank technology as a factor on an insurance company's ability to innovate? Wow. Good question.
Yeah.
Or let's talk about life. Let's make sure we put it there.
Yeah. So, and again, it's by line. So you have to understand there's, a lot of stuff starts in banking, moves to personal, property casualty, then hits life eventually. So, for life carriers, to me, the technology's the tool. It's not the end all be all. You have to, and quite frankly, it's really not even that big of a moat if you think about your business. The other things could be bigger moats, such as balance sheet, brand, distribution, et cetera. But the technology, I think, is what really enables the business to take down that friction and bring down costs, drive efficiencies, hopefully get your NPS scores up, et cetera. So to me, the technology is one of the tools you would use. It's not the end all and be all. It's important. I think you have to make a pretty concerted decision. Do you build or buy? Those are conversations. I've worked in companies where everything had to be built internally. And if you look at those systems of those companies today, they're held together by duct tape and coat hangers probably. So, I mean, you have to really understand, what are you building for the future? Do you really want to be kind of more of a SaaS-based system, cloud-based system, more agile that you can add to it over time? Do you, if you have a legacy system, can you update that to keep that going longer and build, sort of bridge solutions to the future, et cetera? I mean, the technology is important, and you have to be able to have strong technology, but it's not the solution.
Yeah, I mean, if you think about it, there's two sides, right? Even to Amazon, right? There's the logistics and practical, kind of the operational side behind the scenes, and then there's the technology. I will say, like, it's really hard to imagine life insurance meeting the 2020 requirements without, I call it, significant transformation. I mean, so for example, we've been chirped by, like, when I'm talking with people in the space, I feel like what we're actually talking about is sometimes like 2015 innovation, meaning like Amazon's doing crazy stuff, right? Like, they're pushing limits, they're taking away the cost of shipping, they're doing this, they have robots and all their things. There's that, but like, I go as far as to say, like, there is still baseline technology that, like, in life insurance, we have to change to kind of meet that next level. If I can't do, simply put, if I can't do what I want with my life insurer or with life insurance, we have a problem. And what I mean by that is, if I can't buy it the way I want, these are like basic requirements. These aren't even, this isn't like, Blue Origin or, Virgin Galactic. Like, this isn't spaceships here. I would say the technology, at least from a consumer experience, like, if you're not changing, I struggle, and I'd be interested to hear anyone's thoughts. If there's a world where you actually exist, that's for agents. I'd actually say agents, brokers, FAs, and the consumer and the policyholder. If the insurer is not enabling both at a rapid pace right now, at least at a baseline, like, I just don't see. And this is shameless kind of in the plug for the way I see the world, but I would say I don't hear much pushback there. I mean, we all know what exists right now. You have legacy systems sitting at the bottom. Let's get something straight. Everyone is on the call that's constrained by legacy systems, right? Like, we're all sitting there. There's still a different, like, it's the same way Amazon's still constrained by that guy driving the car and setting it on your porch. Like, that's there, but that doesn't mean that, like, you're not innovating from, the picture they take when they drop the package to, the way that the driver does it efficiently, to the fact that I ordered it at 1 a.m, sitting on the couch. So you got to be careful with baby and bathwater. And what we're seeing, practically speaking, is legacy systems, some of them are going to run their course and they're going to run them out. But they're adding, cloud-based systems underneath, or your data lakes you're feeding in to the Amazon experiences on top of that. You surely, like, duct tape or batches are used at points because of your restrictions with, your green screens. But then on the flip side, the companies that we're seeing, everyone's really pursuing making sure that at least the consumer, and the consumer and the agent are going to have that experience.
Yeah, and I think that's important. I mean, at the end of the day, you're building this for the customer, right? I mean, you're building these solutions with them in mind. And I always tell folks, going through your own processes as a consumer, sitting down with your customer service team and watching how tortured they may be with some of the processes you have is really good lessons learned and very valuable. So I think, if you have that kind of a hard time as a company trying to do all this, imagine what your customers think. And one of the questions that I think would kind of dovetail in there, it's let me find this question real quick, because it really does. The unique value proposition for a broker. And I mean, I do feel like a broker who all they do is take orders and tickets and tries to do the transactional thing. I do feel like those brokers are going to have a hard time competing. If you think about insurance as an industry, a lot of it was built on what I call the asymmetry of information. So carriers had a lot of information, consumers really did not. Costs of products were harder to figure out. What was embedded in fees was harder to figure out. But the internet's been sort of a great equalizer, both for consumers and everything else. So you can figure out a lot more and learn a lot more before you make any purchasing decisions. So really, the role of that financial advisor, insurance agent, broker, et cetera, is really much more about being a financial coach and helping you through life's journeys as opposed to, hey, I'm going to take this order for you. I don't need that. Nobody probably on this call needs that, and probably most of your friends and family don't need that. What they need is someone who can help you with the planning process, estate planning, put together these financial plans. Where does an annuity fit in? Where does life insurance fit in, et cetera? So I do feel like you're going to see more multidisciplinary sort of practices emerge and more expertise. And I know just in my circle, folks that are in that side of distribution, that's really what they're working on.
What Dave Crawford has a good question here, and actually I was thinking about that as I was making the presentation. It's like, what's the downside of the Amazonification of life insurance? Like, do we see like big risk here though? At the same time, I think he elaborates more when he's like, how does the traditional life insurance agent compete, and can in a sense, if a consumer can easily get a quote and price shop, like, do we see, like, what's the big risk here if, like, we're all looking at Amazon as the goal versus a potential channel and threat, so to speak? I think there would be a lot to discuss here, but a great question, Dave.
So I'll take a stab at it, and Dustin, you jump in. But I think from my perspective, again, I look at it by product. So term life to me is a lot different than a whole life, which is different than an IUL product, which is different than annuity products. And even in annuities, you have different chassis there. So I do think you have to look at it by product. Term life to me is a very commoditized product. I bought my own one, like I said, 15 years ago online. I knew I wanted X amount. I wanted it for this many years, and it was pretty simple, right? Pretty cheap. Everybody should have term life if you have things to protect. It's pretty simple. When you get into the more estate planning, key man type of insurance, income planning, do I want a DIA? Do I want a fixed index annuity, variable? Those are different conversations. And so again, I think those are more planning products and probably more for the upper middle market, if you will, versus the sort of main, middle market or lower middle market. And I'm fascinated by the opportunity through technology, though, to distribute our products. The whole batch of consumers we normally don't distribute to. Most of our companies are set up to kind of go after that quote middle market, right? And higher. And I think with technology, bringing down your onboarding costs and having more scale and ease of access and straight through processing, I'm very bullish on the market that's out there that's untapped, and so microinsurance and things of that nature. So I feel like there's a lot of opportunities in the industry, and I don't really see a lot of downside for Amazon jumping in. But if they ever were, they're probably going to start small, and they probably go much more into the data partnership / term life. I don't see them wanting to comply with everything else.
Yeah, I kind of had this conflicting. Like I remember going back to 2015, probably when I sat on a panel with you, and I remember someone asking I'll call it making the age old statement followed by a question isn't life insurance sold and not bought? If you've been around, you've heard it, and people ask me. I think as you take that statement and then look at more complex products, my opinion is like maybe even slightly different, that I just don't think they were made to be bought and not sold. So I believe a lot of these products have the good ones, keep in mind, like the good products are very, it's very possible that they're able to be digitally distributed, I say with agents and or through these tech companies, if someone takes the time to rethink them. I just think so much of, I've sat down actually going back, 10 years now with agents where they had the binder and they're taking me through this stuff. Like it was very clearly meant to be sold here. Literally there's a binder and this whole everything was like laminated, and they were taking me through this whole thing. And it's like, well, that product, you can't snapshot that and throw it online. I don't know though. I think if some of these products are good, which some of them are, or they fit the need of that individual, whether it's, diversification, tax reasons, protection, you name it. I just think that the industry hasn't taken, my opinion, we haven't taken enough time to rethink how we're going to make these go digital. But I do agree, like term at Surify, for example, I would say, I guess I can use the word, everyone uses term first, like meaning term is your gateway to what's next. And then, it's like, as you go to annuities, right, then you have your MIGA, and then you go, so each one, right, you kind of take these crawl, walk, runs with your products. But I just don't think, I think it would be, I think it would be hard. Like you talked about the commercial being sold now by Amazon. I mean, you go back commercial. I can remember getting these commercial policies years ago in those forms and like calling the agent, and God knows I was filling those out. And now to see like people are the challenges for those that want to take it. I think you'd be ruling out you'd be ruling out some great opportunities if you think that these things are never going to be distributed digitally for the audience that wants to consume it that way.
Well, you're right. I mean, again, I look at myself. I started on E-Trade right at the .com bubble. Thought I was going to be a day trader. Then I got my head handed to me, right? So, but a lot of people do digital first for a lot of different products. My contention, though, I think when you get into the more complex kind of planning world, people don't wake up and think, well, man, I really need an estate plan today, and I really don't know where my wealth transfer plan is going to hit, and if I'm thinking about my retirement 10, 15 years out, I don't really think about income planning. So I do think there's a role for the human interaction, and it doesn't have to be, it could be on Zoom, it could be over the phone. I mean, so the agent community has to be more adept at these tools as well in terms of meeting those customers where they're at. There was a question earlier around, kind of this, they have all the data, but they have to have these mobile moments and meet these customers where they're at. And agents have the same thing. They have to meet the customers where they're at, Dustin, which I think what you're talking about. And so, could the product be bought? Yeah, absolutely. But in my experience, most people will spend more time, trying to figure out what refrigerator to buy than the retirement plan. So consumers need to have a little bit more ownership in the whole process too.
Yeah, let's take I want to swing around here on an interesting question here about the ethical side. So Jessica Sweeney says, can we see around the corner with the ethical business issues Amazon is facing now for working conditions and fair wages? How will Amazon's reaction create opportunities for us or change expectations for our buyer? Kind of a good outside question to reflect on, Amazon in general.
Well, again, I think there's a lot of different corporate movements and social movements, and those are all fair questions, and probably ones that I'd have to think about a little bit further just to answer off the cuff. But no, I mean, when you think about the different moving parts that are impacting certainly large, huge companies, we have several of these companies we talked about that are $1 trillion plus market caps, and so when you think about doing business with those, those are personal choices as well, and which is why I don't discount the value of a local broker or local agent, someone that's sitting at your little league games, and someone that can sit back and tell you, here's why you should have this policy, and here's what it should be used for. Again, you can do a lot of reading, a lot of research on your own, but in my experience, to get you to cut that check to do the plan the right way, you really need somebody to help you coach you through it.
Yeah, and my comment there kind of goes back to something you said. I think at least just so we're clear, like Surefy's bet is actually that the insurer won't get eaten by Amazon because of the things they hold to be true and valuable. Meaning like Amazon has its pillars. And I think, in many ways, right, they have every right and capability to do what they're doing, right? Because they're playing that game. I think what's great about the life insurance space and insurance companies is, we stand for something different, right? And I think it does create that opportunity, as you're saying, Jessica, about, making sure that these brands, whether they're digital or not, and what we stand for, keeps us in the game, right? Keeps us in the space, right? Like, if the consumer's making choices about who they trust, it's the same reason why, all these logos of the insurers, they mean something behind it. Yep. And let's be frank, Amazon currently means something different. I think as we talk about the threats, we have to be aware of like NPS and trusted brands easily being able to swoop that. Like, I don't really care. Like, if Amazon offers me a credit card, like, to be frank with you, it's just as good as my Chase credit card, right? So they've done that well. As we get to insurance, and more significant insurance and lifelong insurance, which is the beauty of life insurance, and sure they can be. I think, have they earned that spot? Well, today they're not there, and maybe they'll never go there. But I think it's debatable. Some people lean into the practices of Amazon and respect it, and others don't. I think as life insurers, we can, they can stand out. I think most importantly, trust, right? Like, I always look at life insurance as I've analyzed personas and what life insurance is about, right? It's about, you look at it, it's about securing your family's future. It's about a brand that's going to outlive you and outlive everybody. It's right. So there's these pillars, and maybe Amazon fulfills or doesn't fulfill those. Right now, though, you know, everyone that's over, probably 30 has been engaging with agents. You dip down to every young kid at 16 getting their license, and their parents, telling them to go get insurance, et cetera. The question is, where are they going? And all of a sudden, their perception of, the feedback loop that they like to sit down with someone as we talk about more complex retirement plans or whatever, compared to what they're thinking, like they may not even have an option to go sit down with someone.
And Dustin, you really kind of, one of the things I've said for years, and some of my former colleagues have heard this, is that, at the end of the day, if we lose customers in their 20s, it's going to be hard to get them in their 30s, and even harder in their 40s. So part of the challenge for the industry, in my mind, is being there at those right moments with the right products, and figuring out how do you work with these consumers. And the property casualty world's facing this right now, big time, obviously a little bit more than life side. So in my mind, I feel like carriers should win, because we have tools that Amazon doesn't have. We've got the brands too. We've got the balance sheet, distribution. We can use partners to digitize what we need to have digitized, and make ourselves more efficient. So I'm bullish on incumbent carriers, and they should win and find the right strategic partnerships. But again, you have to be able to work on that plan and figure out why you're doing what you're doing, because I'm going to venture to say most of us don't have endless resources. I mean, some of the companies that signed up for this, have $200-300 million venture funds, but most of us don't have that. So we have to be more agile, a little more smart on how we deploy our resources.
We're talking about winning here and how we get there. I loved, as we talked, this last week, we talked about the winner's circle. I loved how you said it. You're kind of like, what's the life insurance winner's circle look in 2025 or maybe even 2030? Project here, Nick, like on what that winner's circle is. Like, what does it taste and smell and look like, you think?
To me, it looks like, there's no wrong door, whether that's for entry of the consumer or the claims process. So to me, it's really about meeting those customers where they're at, having the right digital tools available. But, for most of us, we're serving multiple generations, and some of our clients don't want those tools. So we actually still have to have some foot in the old past, if you will, too. So the question earlier on technology, no, it's not the answer for everything. In fact, if that's your only strategy, it probably won't work. So I think, to me, the winner's circle really looks like a digitally enabled insurance company with strong distribution, probably multiple channels available, partnerships. There's a question about embedded insurance. I think that's fascinating to me, sort of, finding the right ecosystems that you could partner with. And I always say, distribution is everything, and it's everywhere. Are there unique opportunities for you to partner with things you haven't normally thought about? Look, why is Walmart getting into the Medicare, Medicare Advantage type of a business? Well, I mean, that's interesting to me. So when you walk around, you got to think about, okay, what are the opportunities for your company, your products, your agents? What are the newer products? And I think we're going to have a rebirth. I wrote an article a few years ago about the rebirth of the industry, and how we move more towards life assurance in terms of products that follow you along your journey. Dustin, we've talked about that for many years.
Mm-hmm.
The idea that your product should be more versatile and follow you and possibly convert into income. For most people, their biggest risk right now is longevity risk, but you still want to protect yourself from premature death. So products that sort of mature, combination products that cover other risks for you, such as long-term care. And so to me, I'm fascinated that I think we're going to have different looking products, digitally enabled products, digital distribution, but also, that claims process being digitized as well.
I really think, like Manoj's comment there about embedded, and you just hit it. I was going to come back to it. I honestly think that winner's circle is, yes, digital is a part of that, but embedded has a, kind of a, you have to have digital to be embedded, at least in the way I believe Manoj is commenting on that. It's like, I believe distribution, just like we look at insurance. I always say, like, if you go to all these insurance companies, at the end of the day, right, we're seeking good risk and growth in premium. If you ask, like, when we look at all the FANG stocks and or these companies and we talk about fear, they're actually talking about distribution. That's, in my opinion, they have distribution because they have eyes. Yes, they have data and all those things, but at the end of the day, shoot, we should fear them if they don't have data, but they have all the distribution, right? If everyone goes there, it's just that much better that they're getting better with their personalization. So when I look at that winner circle, for me, it's about those insurers must go on the journey to be digitally enabled from, forget embedded for a start, just a natural digitally enabled agent and direct to consumer. That next level, though, is definitely for me having good channels and good percentages of your growing premium coming from embedded sales. That's what, if you ask me, I mean, in many ways, that's what next is, right? Like, or you go to SoFi and Ladder. That's what that, I mean, we can debate technologies and wrapped in SDKs and APIs, but we're talking about embedded insurance here. And if we talk about the fear we're having in life insurance, as you commented on, agents kind of, the number of agents is shrinking, and we have a massive gap of proper coverage in the country. The only way, I just don't see a resurgence in doubling of our agent count right now to cover the growing population. So the only way that's going to happen is we're looking at the digital channels, and people spend hours on their phone each day, which is sure as a hell lot more than they spend with agents anywhere. Maybe they do that once a year, right? If we're lucky as an insurer, we got to get there. And if we do that, I think we're going to see, just like we're seeing, the growing, single digit percentage of life insurance distribution going digital. I think over time, we're going to be able to break that pie chart up and say, okay, that's direct digital distribution. That's agent digital distribution. And here is channel or embedded digital distribution. I think the companies, I've told our clients, is the companies that build BD teams like a startup would and look to drive those. It's going to be a slow start, but I think in the long run, you're going to see that pie chart start to really spread its wings of like the type of alternative omni-channel distribution. And it's not a one size fits all. I mean, look at my rants almost over, but look at what Ladder and Ethos and them do. If you start to see what they're advertising to, they've gone from pure digital. Now they're going back to agents, right? So they're not forgetting, or when I'm working with D2C players, everyone respects like AAA's, mailer game, right? Because their mailer game is great, right? They've been really good at, paper mail. And so the challenge is for all the incumbents is the startups and or these insurtechs are not forgetting about what you're doing well. They're just adding. And I think the inverse needs to be true. Is like, let's not bag on some of these older ways that work, but rather enable forward looking. And then I think though, but the kicker is that pie chart of percentage of distribution over the next 5 and 10 years is going to change pretty dramatically, and you got to be ready.
Yeah, absolutely.
Let's see. I'm seeing if we got any. By the way, everyone, we had over 250 people join. I don't know what the exact number is, but I know that. Just want to thank everyone for coming today. Hopefully you've enjoyed the chat here.
So hey Dustin, I had somebody send me a private message around saying you're stupid. So can I tell the whole story about that, how that came out?
Real
quick?
Oh yeah.
So what happened was, Dustin may not remember this. His first idea was to build a digital first insurance product that's going to have a scale and a Fitbit and all that. And we sat down and I said, man, that's just dumb because the commissions you're going to get won't cover the cost of that. And I said, what you need to build is a platform where carriers could partner with you and use it. And so, Surify, I take a little credit that I was the genesis of your idea that you've actually executed on.
Right, and adding a little color there. Some of you on this call may have experienced me walking around showing you this, like, think of life insurance in a box, right?
Exactly.
As you just said, I think it was about a $150 to $200 hardware cost to have those tracking capabilities. And then I hopefully Nick's still around, so he didn't think I was that dumb. But a lot of people did remember that day. I actually still think in the work site world or the work, the group insurance, I still think although the commissions and stuff are low, I think there's something like we need to create tangible products. And I think even telematics and mobile, application and auto is actually making something a little more tangible for us. So I haven't given up on the insurer, I'll call it being a little bit more tangible as we go on. But
so Kelly says, did I just take credit for your company? Well, maybe I didn't do any of the work. I was just talking at a bar over some beers. Yeah. So it's just
right. Yeah. We all know how good just throw out ideas are, right?
Exactly. I didn't do anything. I just gave you this idea.
Corey over here says Nick the Godfather. So, well, actually, I do. For everyone here, I shamelessly say Nick, is one of the godfathers here at Surefy because anybody that'll take your call as you're learning and growing and give you real feedback, but also while he thinks he think you have a major pillar issue or a major problem, so while connecting you with a professional to get you further, that's the exchange, right? Is like, yeah, you need a change, but I'll also let you talk to someone that is that also could help you guide this, and that's what great mentors are. So for all the InsurTech people out there, people are telling you it's stupid. The next question is, who can you introduce me to that can help refine that idea? So
absolutely.
All right, well, we're ended on time. That's rare for me here. Thank you all for coming, and I look forward to the next one we all have together. Thank you, Nick, as always.
Good to be with you, man.
I hope post-COVID, I hope to see your face and drink a beer again, and you can tell me some things that I'm doing wrong. So thanks so much, everybody. Have a good one.
You bet. Thanks, everybody.